Welcome to the Nardi Realty podcast with Robert Nardi. Well, welcome back, listeners. Charlie McDermott, producer, co-host of the show, here with Robert Nardi. Robert, how you doing?
I'm doing great, Charlie. I'll tell you, this weather for being in May has been outstanding. It's still kind of low humidity and in the upper 70s, 80s, lower 80s. I mean, it's just been amazing. And the evening cools down. It sort of like reminds me of, I'm originally from Ohio, and it reminds me of the summer months where sometimes where that, you know, it'd be warm during the day and then get cool in the evening. It's been so enjoyable. So
yeah, sure. I was almost chilly the other day. I went out in the morning. I guess it was after the storms the next day, after the storms came through, and it just cleared everything out. It was absolutely gorgeous.
Really nice.
Which is kind of, you know, redundant. I mean, it's like Groundhog's Day, right? It's I mean, at least with the sun and everything else. But boy, yeah, you're right. The humidity is really down. So, you know, all we need is for that to continue through, like, I don't know, November, and then we'll have hurricanes. And
you're really wishing. I hope you have a genie in a lamp so you could rub that lamp and get your wish, because, you know, it actually. I've been down here 21 years, and the weather has been changing, but it usually follows a certain pattern of, like, June and July get a little bit more rainy or a little bit more humid. August is our worst month. That is, it gets the most humidity. And then September sometimes can be better than August, or it could be as bad as August. It's just that September month's a weird month. It could be good or bad. And then by middle of October, it all goes away. A lot of the humidity goes away. It's like Mother Nature says, "Oh, you're done with humidity," and then we have, you know, usually pretty good weather.
Yeah. Well, humidity it maybe is a good word would explain what's going on with the interest rates lately. I mean, the Fed was it just yesterday or the day before bumped up interest rates again. And, you know, we both enjoyed, and I'm sure your listeners, days of when it was low humidity, low interest rates.
Right. It's they bumped it up 0.25%, and now it's at 5.1%. So that means, you know, lending once again gets to be more expensive, and that includes, you know, a lot of everything, like including automobiles. You know, if you're buying an automobile, that interest rate is higher. Most of those interest rates, even with a good credit score, are now 7 to 8%. You know, so but before then they were usually around 3 to 5%, or you know, right around that mark. So it really has an effect on the psyche. Like, I think people, when you're talking to friends and family, you know, I you know, they know I'm in real estate and they love to talk and about real estate, and they're like, "Well, we're not moving. I mean, I have a 2.75% interest rate. I'm not moving anywhere." He says, even though sometimes you think, like, I would like to move, I'm just staying put. So that's where we're getting a lot of staying put people, because their interest rate is so good. And if you think about it, you know, you go from 2.75 all the way up towards the 7% mark. I mean, it's 40%. I mean, it's a big increase. So it's a tremendous amount of increase. I mean, it's like 200. It's you know, if it's 2.75, that's almost 200% going up. So it really can limit people from experiencing a new house. And so, but there are things in that people need to know that maybe can help them out. I mean, first of all, when you're thinking about moving, and say you have either a life, or, you know, most people move because of a situation: divorce, life, death. You know, right now people aren't just moving to move on up and move down just to move. You know, there has to be a reason. So you have something major in your life that's happening. But those people really need to figure out what they can afford then, because even though right now their interest rate could be at 2.75 to 3.50, they have to figure out, what if I buy something at 5.5, maybe they'll get 1% off, or buy down a point, or do some of these other things that they can do. What is my payment going to be? The best, and you know, and people love the internet, and they go on the internet, and then they go ahead at these other mortgage internet places, and then they put these numbers in, and then they get a call, and then they, you know, it's sort of like they get spew out a number. And I'm an old fashioned kind of guy. Like my thing is, referrals are very important. So what I would do is, if you're thinking about moving and you have a situation that really calls for a move, then I would go ahead and seek out a good mortgage lender, you know, and basically you ask all your friends, just like that, you ask them about, where's a good restaurant, who's a good realtor, who do you know anyone in the mortgage industry? And if your friends don't know, obviously the last realtor you used can probably point you. We have a handful of lenders, and we have lenders that do their own underwriting, that can bring in a loan, can underwrite it themselves, and you could be approved in 14 days. That's how fast it can go. So my biggest advice is and shop around. Then people say, well, this guy gave me 6.2 and the other guy gave me 5.5 and the other guy gave me, well, yeah, that's important. You need to know the interest rates, but you also need to know what the charges are that are associated with those interest rates. That's very important. And once you get a good lender, then and it doesn't stop there. I mean, your credit score, if you have a good credit score, and that's generally 720 or above, that's considered really good here in this industry. And so, that determines sometimes your rate. If it's below that, you might be bumped up a little bit more on the rate. So, and if your credit rating is really, really low, that could be a detriment, because it might be 2 points higher, two more percentages higher. So, the interest rate is important, but also people's situation is important too. Don't forget, like if you were a veteran, there are VA loans. If you're buying a home, a single family home that's FHA compliant, you have the Federal Housing Authority loans that you only have to put 3.5% down. I mean, you need to talk to the lender and you need to let them know. Some people are there's programs out there for people who fought in our war, or just joined the army, or there's different levels. Like even our firemen, policemen, there's programs out there. Even doctors have special programs where a doctor just graduates from medical school, he does his residency, and now he's going to be out in a full-time job. And usually their first salaries are fairly higher than obviously they used to make in residency, so they might be able to buy a home. But they have special doctor programs where that you could put 2% down, or very little, or they work with each individual. That's why people shouldn't just stop at their credit score. I mean, they have to look and then communicate with the mortgage lender and say, these are the things that I was involved with. Is there any way we can use a program that can help me? Some of these programs give money to you, at closing, $10,000. So I mean, it's very important to talk to a lender who's been established, who knows what they're doing, and also you being communicative to them and letting them know what you've done in your life, and maybe they can structure something around you. Like I was just talking to a veteran yesterday, and he has this VA loan that he applied for to get a pre-approval. So I guess because he fought in both Iraq, I guess he fought in both Iraq wars, or one Iraq war, and then he also had some unfortunate injuries, but he was fine then after that, all of that. But I mean, he's ended up getting like a 4.4% interest rate. Wow. Given to him by the VA. So I mean, those are things that you have to think about and use in this market. You've got to think out of the box. Don't think in the box. And a lot of people, and I'm not bashing regular banks, because regular banks are great, but a lot of times regular banks are looking for a lot of A credit scores. They don't have the flexibility as other mortgage brokers. There's mortgage lenders and mortgage brokers. There's some mortgage brokers that go out and they shop your loan out to other people. And so that they try to get you the best rate. It could be one-stop shop. They also offer different programs for you. So banks are a little bit more restrictive, and I do all my banking at Wells Fargo, and I had my last mortgage with Wells Fargo, and they did a good job, but it was a long process. I mean, it was a long process. A lot of the banks can take up to 6 weeks, sometimes even up to 8 weeks. And I have a good credit score. So it really depends on, what you want. And now with negotiations, I mean, the amount of money for the percentage for the interest rate is higher, but what if you came in and said you can close in 3 weeks and it's going to be a mortgage, or I could close in 30 days or less? That seller might be inclined to take a lesser amount of money. So it could be a good negotiation tool as well to be able to be with a lender who can get the job done in 30 days and be able to close on that 30-day time, instead of saying, well, I need 45 to 60 days to close.
Hmm.
Well, that seller's not going to be as motivated, because now they got to wait another whole month maybe to get a closing. So those are the things that I think people should think about, and you need to qualify. They look at your ratio, your debt ratio, and then you look at what your income is, and they have all these manipulative ways of figuring out what you can afford. And before you go out there and think like, okay, I have a life-changing event, I'm going to buy something, and I need to know what I can afford. So that's when you go to the lender. And then I said, you think out of the box and you tell them all these things, and they might be able to come up with some programs for you. And then you know exactly what you can afford and what you can buy. So those are some things to think about.
Yeah. Yeah. Lots to think about. And, I guess a question I have for you then, Robert, is there any benefit to buying now and um, banking on the fact that interest rates will go down if there is such a thing, and that like we saw over the past, I don't know, 3 or 4 years, that
Right.
your home appreciates? Is that kind of the what?
Yeah, because that's once again with your lenders. So they have 5-year arms, they have 10-year arms,
Yeah,
wherever you
yeah,
feel comfortable. Usually if you they have a 3-year arm, wherever you feel comfortable taking it. Now they do bump the rate up if you don't pay if you don't refinance. And that's another thing that you need to look at. You have to look at, every lender that you go to, you need to ask, what happens if I pay off this loan in the next 3 years? What happens if I pay off this loan in the next 5 years? What if meaning I refinance and then I
yeah,
pay it off and then I have another loan? Because some of them won't let you do that. Some of them won't let you refinance within a certain time frame. Some of them want you to keep that loan for 10 years. And if you try to refinance it, then they're going to penalize you. So those are, once again, that's a good question, because to lower the interest rate, there are ways of lowering the interest rate. And over time, yes, we've had interest rates go high, and then we've also had them start to decline. And we're hoping this whole interest rate thing has been a measure to stave off inflation the way it was running. So it was like around 9.1% at one point inflation several months ago, and now it's actually cooled off a bit, and now it's around 5%. So by raising the rates, it's doing its job about lowering inflation. Now, there are some good news with the economy. The jobs market is amazing right now. It's one of the lowest it's been in history. People are working out there, but unfortunately, things are more expensive to purchase, and so you're working more. People are working, but maybe unfortunately their salary isn't keeping up sometimes with what's happening out there. But really, those are all the things that you need to discuss with their lender. They're the experts. I sell real estate, and I know how to sell real estate, and I know how to help people buy real estate, and I'm a good negotiator, and I have good skills in all of the facets of real estate. But I'm not. It's because some people look at me and say, "What do you think? What do you think I should do? What do you think? Should I do the arm? Should I just say, go with the expert. Go with the expert, sit down, get the programs all in line, and look at what the program is, what it's going to cost you. Ask some of those questions like, can I refinance in 3 to 5 years? Will I get a penalty if I do? And those are the things that you need to ask.
Yeah. How about on the investment side? You manage a lot of properties there, you and your other agents. What are you seeing? Is that, where I guess as long as the rents keep up with the market, does it, not that it doesn't matter what the interest rates are, but does it take care of that?
Well, the thing is that commercial real estate or having rentals is a lot different from just residential real estate.
Right.
Residential real estate, some people want a home because they're looking for a 3-bedroom, 2-bath, but they fall in love with the house. This is exactly what they're looking for. And some of them care about, there are people in this world that care about the pricing, but there are some people that just say, I really want that home. It's in a community that is a great community. It's a tennis or golf community, which I want to be a part of. Also, I may have children, and it's in a great school district. I mean, and I want that house. So
Yep.
sometimes they pay a little bit of a premium to get the house that they want.
Mhm.
Where when you're looking at rentals, you're really looking at the rate of return you're going to get when you rent the properties, and that you have to be very careful with. Which brings me to another point, and I'm just going to throw that out here since I'm on that subject, is that if you're buying a triplex or a duplex, make sure that it's zoned for a triplex and a duplex, and make sure that they have the proper permitting to make it into those triplex, and it's zoned for that. Because we've come across, I didn't have this happen, but within the board here, they came across a six-plex, and it was only qualified for a quadplex. And so now these people thought, these people wanted to do remodeling, and now they can't do the remodeling because the county won't let them do it because it's only zoned for a fourplex.
Wow.
So they took a big hit because they bought it based on that income from six properties, six rentals. And now they're only getting 4 rentals. So there's going to probably be some type of here and there, because why didn't anybody know this? How could it be zoned for something that you don't find out? Even the title, like I would think that they would do a title search and do all that.
Yeah.
You would think that they would even know something about that. So that's a whole different breed. But really, the rents have become higher. So that does help with the percentage that you're paying for, say, a rental property. But those rental properties tend to be a little higher. Once again, a higher percentage on those properties. But now rents are coming down a little bit again. So see, everything that goes up goes down, and everything that goes down goes up. So it's all cyclical. It's all timing. You just hope that you're on the right side of the timing.
Yep, 51% of the time, and you'll be successful.
Right.
Well, hey, this has been really insightful, and I know helpful for a lot of folks. And boy, until next month, see what happens. I guess right now the Fed's put a pause on things, hopefully, maybe. And
well, that's what they said. So they said they indicated that they're not going to do any more raising of the interest rates. So, which is a good thing. The other thing on that side of the coin too is that now that interest rates are higher, your money in the bank is getting a much higher percentage. So you may want to think about putting it into a CD and getting. Some of the online banks are offering 5%. I mean, that's huge, because you figure even if you had $10,000, 5% of $10,000 is $1,000. You're, it's I mean, it's $10,000. 5% would be, I'm sorry, $500. But for over a year. But I mean, you just. It might be a good time to put that money in the bank and save something and get a good interest rate for it. So
it's a great idea. You kind of forget, because the interest rates were ridiculously, they were nothing. So
right. 0.001% or something. It was nothing. You get like a few bucks. I love when I get the statement, 23 cents.
Yeah. Oh man. Well, hey, thanks again, Robert. And we will talk to you next month.
Sounds great, Charlie. Take care of yourself.
Thank you for listening to the Nardi Realty Podcast with Robert Nardi. To learn more about Nardi Realty, go to www.buynaples.net. That's buy, B-U-Y, Naples, Naples.net, or call 239-293-3592.